This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Kristine Aquino. She's in for Carol Massar. I'm Tim Stenovec on this Tuesday afternoon. It's the 11th of August, 2026. Just to remind everybody how the markets closed today. The S&P 500 fell 0.3%. The NASDAQ Composite down 0.6%. The Dow fell 0.3%. As I promised, we're doing something special in the 4 o'clock hour. And here we are. Deaux is Bloomberg News senior economic Statecraft reporter. He is here with us for the next hour. We're talking everything when it comes to rare earths and critical minerals, a crucial part of the supply chain for everything from electronics to weapons systems. Joe, we've wanted to do this for so long, and we're glad you can do it. I have to say, we're happy to have you, Kristine. Carol is so sad she's out today. Oh, but Joe is making it up to her because next week when I'm out, I guess Joe is stepping in a little bit. So he's going to be here.
You get more Joe.
Okay, so Joe, I want to start with you. Then we're going to bring in this fantastic lineup that we have for the next hour. And all of it is thanks to you and the people you've brought us over the last few years. So we are grateful to you for that. I just want to start, Joe, with a general question about critical minerals and rare earths, because when I met you, you were metals and mining reporter. Yeah. And we talked to you sometimes about heavy equipment. And then something happened. Something changed. What was it? And why did rare earths and critical minerals become this conversation that investors, the administration, and we're so focused on?
I mean, if we really go way back, right? The pandemic hits in 2020, in case we forgot, and supply chains became a story, like actual supply chains. And those of us who are in the commodity space had covered actual supply chains, understanding the procurement officers at various big companies you've heard of, right? Soda companies, beer companies, car companies. And then if we just move from there, it becomes very apparent to investors in a big way why supply chains matter. Fast forward to a couple of years later, 3 years later, China, in the middle of the summer of 2023, shocks a lot of close watchers by saying they're putting export controls on gallium and germanium. And these are two elements that are absolutely essential to defense technologies. Right, defense, right? Like it's not a Silicon Valley thing. It's not Apple and Google. It is very much, these are defense applications. And we had some reporting shortly after that time. We did a big take that said when those export controls were announced, it sent off alarm bells throughout the Biden administration. And we had a senior administration official tell us for that story, that was the moment that all of the concerns that various agencies had, in particular the Pentagon, and trying to warn, big players in Congress, the President of the United States, that it was there. And that is where we are now, right? So the Biden administration moves on, Trump administration comes back in. They had long had this conversation about the importance of rare earths and critical minerals. In some ways, it was Trump and Trump 1.0 that put this on the map. Mm-hmm. It got supercharged, right? Liberation Day happens. The President of the United States puts tariffs on every imaginable country in the world, and he goes hard on China. And China responds just a few days later. Initially, nobody heard about it because it just happened in the middle of the night on a Thursday. And they said, we are putting export controls on rare earths, the important rare earths, but also permanent magnets. And this is when it went from becoming a defense technology problem to an all-out tech war.
You bring up exactly what we're going to do right now perfectly, Joe, because you fast forward from then to today, and we're regularly hearing from the president about this, meeting with executives from the mining and critical minerals industries, including on Friday when he had them down in Washington, D.C. Check out what he had to say about the U.S. versus China.
Accredited mining programs in the United States now graduate less than 170 mining engineers each year. while China graduates more than 3,000 and half of our current mining workforce is set to retire within the next 3 years. Wow.
That was President Trump on Friday. Joe, jump in here.
Yeah, I mean, his wow at the end, right, is, again, a conversation that you've been hearing in the world that I've been covering for a long time. I mean, I remember sitting in this office, call it 3 or 4 years ago, with the now former CEO of Rio Tinto. And, we would catch up with him every so often. And one of the things that he pointed out was, Joe, one of the big problems we have is a lack of geologists and a lack of people who want to come in to the mining space. Rio Tinto is the second largest mining company in the world. Well, who were they losing that talent to? Oil and gas. So when you hear the president say last week, we're having an aging workforce, well, it's largely because the people who are capable of a lot of these jobs are not going into mining. And we've had some wonderful reporting out from our commodities team, even this year, about the dearth of labor. And, that's just the tip of the iceberg.
Well, somebody who is at least going into mining from a reporting perspective is Polly Mosendz, a reporter for Bloomberg News. Polly recently writing about how the president is rewriting corporate norms with this 211-mile Arctic road. The federal government granting a permit to build a road through the Alaskan wilderness. In exchange, it gets part of a mining company. Polly, what is happening here with the road? And sort of the economic statecraft part of this, which I think investors are becoming increasingly used to.
Yeah, absolutely. I think it's funny to ask what is happening to the road. Well, right now, nothing, but soon, potentially everything, right? This could completely alter the way of life there, which is that people go bush plane by bush plane from village to village. To build a road in this untouched wilderness would really strongly change the way of life there, but it would also really change the mining environment there. You're going from having extremely expensive expeditions to try to prospect in very costly helicopter rides to being able to drive in and, really see what's going on there, see what could be mined there. And also, once the mines are actually built in, say, about a decade, to be able to just get everything on tractor trailers and freight it out. That is a huge, huge difference. So right now we're at the very, very beginning stages of that, but allowing this road to potentially be built allows you to completely change the way that people live there and the way that mining is able to make money in Alaska.
Now, Polly, one of the things that stood out from your story is the fact that the due diligence by the government in terms of carrying out the project was completed in less than 72 hours. And that seems a little too short, right, for a project that, as you say, is going to completely change the way that people live around that area. What could have been potentially missed given that rush to complete the due diligence?
Yeah, I think one of the big questions is how successful is this mining district really going to be, right? Because there's a lot of prospecting still to be done. I think something that we and the federal government, still need to see is exactly how much ore is going to be able to get out of there, how profitable it will be. And also you have the big question of how much are people going to want this stuff, maybe if we're not in a huge AI boom, what does that actually look like? So that is a big part of what due diligence traditionally would be looking at, is how successful is this investment going to be on a long term? And also, what does the American taxpayer necessarily get out of it?
I'm so glad you went there, because I'm struck by, or reminded of, something that Joe told us months ago at this point, and a point that he makes a lot, Joe, and I'm going to turn it over to you for this, is that the numbers historically have been really hard to make work for some of these companies. Like, mining and processing rare earths is not an incredibly profitable endeavor, especially if you don't have government support.
Yeah, it's it's just not profitable.
Like, think about the MP Materials story, right? And the Mountain Pass mine. This company, MP Materials, got on a lot of people's radar over the last couple of years for the first time. Mm-hmm. But they operated a mine they are operating a mine that has been in operation for almost 100 years at this point. Yeah. And even in the last couple of decades, what was part of a company that went into bankruptcy, then emerged from bankruptcy. Like, this is not easy work.
No, it's like what do they say? Squeezing blood from a rock, right? I mean, there is a reason we have not done this in the United States for a long time. Mm-hmm. There's a reason that we don't have as the president puts it, mine to magnet supply chain, right? From pulling ore out of the ground to creating the permanent magnets. I mean, with the exception of MP Materials, which you have stated, does actually do this. There is no other real comp for the United States. There are some permanent magnet companies. There's some smaller ones. Novion is a well-known one. But essentially, this is not a market that exists in the United States. It is something that the United States has now decided that it needs to build. And this kind of brings us back to Polly's story, which Polly and I, full disclosure, she and I worked on this story together. But like one of the questions I have for you, Polly, is you have not spent your career writing about metals and mining, which also is the terrific part about working with you on this. But I am curious, what is it that brought you to this topic of Trilogy Metals and why you wanted to make this your big project for the year?
Yeah, I think to me, it's really the economic statecraft that we were talking about at the beginning. It is inherently unusual that the federal government is taking this role and taking this stake. I think that is something that is worth exploring, and we should all be interested in all of the deals that are being invested in, right? As taxpayers, as citizens, I think that it's important to know what the federal government is doing with the taxpayer budget. I think that we should all really be aware of not just the outcome of the deals and how they might make money in the long term, but how those deals get put together and who gets what out of those deals as they are being structured, right? Because in a deal like this, the stock pops when the deal gets announced. Whether or not people make money if this road gets built in a decade is a totally different question than what happens when the deal gets announced and when the deal gets made.
Yeah, well, I mean, very interesting, Polly, because, as Joe had mentioned, really a lot of the emphasis on investment in critical minerals was all about freeing the U.S. from its dependence on China. It's all about the supply chain. But, so the supporters, that's the argument for them. But then if the U.S. already produces a significant amount of copper, for instance, where really is the vulnerability here?
Yeah, I think that's a good question. I think this is really Joe's expertise, but I think that the vulnerability can also change with time, right? Perhaps there might not be a huge emphasis on copper in 3 to 5 years under a different administration the way that there is right now. We just don't know. And I think that's also the really hard thing with mining is that these take so long to get built out and it takes so much longer to refine everything. And the planning is really time consuming, but we're making choices with the information that we have today for a mine that might not be operable for a decade. And then also once it is operable, you actually don't know everything about the quality of what's in there until things are really underway. And then also what happens if there's a natural disaster or a man-made disaster or just less minerals than you expected. So it's really hard for us to sort of talk about sort of the copper and how we might need it in this moment when all of our forward thinking is so far out. And Joe made a great point that it's hard to make money in mining. And here we're going to try to make money in mining with the taxpayers on the line.
Polly, it's a great story. You wrote it along with Jacob Lawrence and Joe Deaux, who's sitting here with us. Polly covers metals and mining, and she joins us this afternoon on this special. We appreciate your time, Polly Mosendz. Thank you so much. Check out her story on the Bloomberg terminal and at Bloomberg.com. If you are just joining us, we are doing a special thing this hour. It's an entire hour on economic statecraft, metals, mining, specifically rare earths. Joe Deaux is with us for the entire hour. He is Bloomberg News economic statecraft reporter. If you have any questions for him, you can go to Bloomberg.com/askradio and leave questions for Joe. Send questions to us. We have joining us in just a few minutes, Gracelin Baskaran, director of the Critical Mineral Security Program at CSIS. And coming up a little later, Tripp Hornick is stopping by, principal of Quince Street Strategy. He understands the sort of connection between these private companies and the government because it's his job to go and work out those deals with the government. He's going to be stopping by in just a few minutes as well. Any questions for Bloomberg subscribers or terminal subscribers? Bloomberg.com/askradio. All right, we continue our special on metals, mining, critical supplies, and rare earths in just a few minutes. In the meantime, Charlie Pellet is standing by because he's watching everything happening in the after hours, and it's a busy day. Hey, Charlie.
Indeed. I thank you very much, Tim. Indeed, mining the earnings results after hours, and got to begin with CoreWeave. It's a cloud infrastructure company. It reported second quarter revenue that topped estimates. Shares surging after hours, up by roughly 5.5%. Second quarter revenue, $2.58 billion. Estimates there, $2.56 billion. Nebius shares following CoreWeave higher. after earnings. Nebius up now by just about 3%. Also out with earnings after the close of trading, Super Microcomputer shares surging now by 10%. It's out with a sales forecast for the current quarter. The top analyst estimates a sign that the booming AI market continues to yield results. Again, we've got Super Micro up now by 10%. Also reporting earnings, not a tech company, Mediterranean restaurant chain Cava Group. Its second quarter sales beat estimates. Comparable sales for the second quarter coming in better than expected. The Dow, the S&P, NASDAQ all lower today. S&P wrapped up the Tuesday session at 7728, down 25 points, dropped there of 0.3%. To be sure, holding close to a record on the S&P. The Dow down 184. On the Dow, dropped there of 0.3%, 53,791 today on the Dow. NASDAQ lower today by 0.6%. 2-year, 4.22%. The 10-year ahead of the CPI report tomorrow morning, 4.69%. Spot gold down $21 the ounce, down 0.5%, 43.69. A lot of focus on crude oil today. People certainly keeping an eye on developments in and around the Strait of Hormuz. Today we saw West Texas Intermediate crude up 1.6%, 83.42 a barrel. Brent, the global benchmark, 89.14, up by 1.6%. Briefly, in the airline industry, Delta investigating an unauthorized Wi-Fi network on one of its planes out of Las Vegas, which is where a major cybersecurity conference was being held over the weekend. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie, for that update. As I mentioned, it's a special hour for Bloomberg Businessweek Daily. We've got Joe Deaux with us. He's Bloomberg News senior economic statecraft reporter. He's got everything on this crucial part of the supply chain for everything from electronics to weapon systems. We're talking about critical minerals and rare earths. We're also joined right now by Gracelin Baskaran, Director of Critical Minerals Security Program at the Center for Strategic and International Studies. We're talking to both of you and our other guests today because, Joe, as you reminded us, it's been about a year since the U.S. kicked off that critical mineral statecraft agenda. There was that unprecedented $400 million equity investment in MP materials. I can't believe it's been a year since then. Here we are a year later. Is the U.S. any closer to weaning itself off of relying on foreign partners or adversaries for critical minerals and rare earths?
Well, I spent a lot of time writing about this, and one person I like to often ask this question to happens to be our current guest.
Oh, perfect. Is that why you brought Gracelin Baskaran to us?
I'm hoping she might have some answers for us.
All right. She's Director of Critical Minerals Security Program at the Center for Strategic and International Studies. Gracelin, you join us from all over the world, and we're grateful for your time this afternoon and every afternoon that you do join us. Is the U.S. any closer to no longer relying on partners and adversaries for rare earths and critical minerals?
First of all, thank you so much for having me, and thank you for the phenomenal work Joe does. He is reliably also one of my sounding boards, so it's a mutually beneficial relationship. Now, when I think about this question, I think there's two things we need to split out. Are we moving closer? Yes, we're moving closer, and the scale of the investment, the capabilities that are starting to come online. When China imposed restrictions in April 2025, we didn't have heavy rare earth separation capabilities outside, but slowly Malaysia came online, but one of the things we have to remember is that we still have a very long ramp to self-sufficiency. As you know, recently the G7 put forth the goal of 60%, not being more than 60% reliant on a single country outside of the G7. That's a pretty ambitious target. Japan's been working on that goal for 16 years, and they are now approaching that 60% mark. So we're getting closer, but we still have a long road to go.
Gracelin, we're 12 months removed since the USA Rare Earth, getting them all mixed up, MP Materials announcement, which really brought a shock, I think, to the market, right? To investors, to companies, to suddenly realize not only was this being talked about, but the government was there to make happen what you were just describing. I'm wondering, with the president's summit that happened on Friday, do we feel like coming out on Friday and making some of the comments that he did is more kind of reminding people that the government's there? Or do we feel like he was sending some other type of message?
The number one message I took away from Friday's roundtable with President Trump, which also saw Secretary of State Rubio, Interior Secretary Burgum, Commerce Secretary Lutnick, was that industrial policy is here and that the government is here to support companies working in our national interest. In addition to making substantial funding announcements, he talked about developing the next generation of workforce through federal dollars. He talked a lot about onshoring those capabilities. So industrial policy, once a word that both the left and the right kind of frowned on, is being seen as vital to seeing American industry succeed.
Yeah, I mean, very interesting, Gracelin, that concept of onshoring, right? And we've also heard about friendshoring, which is another term that has come up in the discussion over rare earths. And, do you think that a lot of these investments outside the U.S., is it ultimately more realistic than trying to build a fully domestic critical mineral supply chain?
Absolutely. There is not a country on earth, maybe, with the exception of China, that has the geological resources, the financial capital, and the technical know-how to do it alone. And this is where, at a time when it sometimes feels like American foreign policy now is America alone, critical minerals are an area from the very get-go that we have embraced international cooperation. And when you look at the rare earth supply chain alone over the course of the last year, you have seen substantial U.S. support be announced with the Japanese, the Australians, Saudi Arabia, Angola, Brazil. And so this is really a sign that the U.S. does not intend to go at it alone. And that partnership is going to be really crucial if we're going to reach that mine to manufactured goods supply chain in any reasonable time frame.
Gracelin, I think in the first few months after the MP Materials deal, there was a genuine concern in critical minerals circles that the U.S. was going to go it alone. It was clear by the end of 2025 that was not the case. But as you look back on the past 12 months, what sticks out to you as maybe the most underwhelming part of the critical minerals policy we've seen so far from the administration, or something you think they really need to improve on moving forward?
I think one of the areas that's probably been the weakest are price floors. There is an acknowledgement that the problem we have today is not a political problem. It is an economic problem. It is how do we get projects outside of China to stay commercially viable? You saw a lot of discussion over the last year talking about instituting a price floor. But it's complicated, right? Because there's a principal problem that we can't seem to agree on even with our G7 counterparts, which is who pays for it. Is this a cost that the taxpayer bears? Or is it a cost that the person buying the automotive bears? And I can tell you, having spent a lot of time with our counterparts in places like Australia and the UK, that they feel much less inclined to put that burden on the taxpayer when those resources could be used for healthcare, education, housing policy, et cetera. So one of the principal challenges we are left with is how do we ensure that projects outside of China can compete and stay open at a time when a lot of these prices may be lower than cost of production?
Is the answer ultimately a price floor?
The answer is probably a more comprehensive toolkit. So when we look at what the U.S. government did with Lynas in Malaysia, it was basically an offtake contract. As opposed to a guaranteed price floor for everything they produce, it is we will buy X quantity at Y price, right? The same $110. So it's probably going to be a combination of procurement, public procurement, facilitating private procurement with American auto manufacturers. It's going to be ongoing support, particularly for processing facilities, to cover the delta between where their operating costs are and what they need to be profitable. So I see it as probably being a comprehensive toolkit. I think the reality is when you look at 60 critical minerals, getting the U.S. government or even a coalition government to guarantee a price floor for everything is going to be fiscally very difficult, particularly when you look at the cost of the war in Iran. I was in Australia when a lot of the discussion centered around the additional financial support needed for fertilizer and energy and how that was going to potentially move resources away from critical minerals. So given the state of the world, expecting that to be a full balance sheet cost is difficult. So creative tools are going to be necessary.
Yeah, that's a perfect segue for what I wanted to ask you, Gracelin. And it's the idea that necessity is the mother of invention. So, well, these might be critical minerals right now. Is there innovation happening with some of the products that these ultimately go into where they will not need as much or they will no longer need these minerals that are challenging to source?
Absolutely. I mean, I would also add to that and say scarcity is a very powerful driver of innovation. If you go back and look at the 1970s oil embargo and what it did for energy innovation. Now, if we look at what the US and our allies are doing, I think there's a couple things, right? So the first is recycling. How do we recycle our black mass? And the US, especially through the Department of Energy, has made significant investments in recycling to get some of these materials back out. We know how to recycle lithium. We know how to recycle copper, but rare earths permanent magnets are a little bit of a new area. So investing in innovation to recycle. The second one is investing in innovation that uses less materials. And we see that to be true, for example, with BMW and a motor that doesn't need rare earths. And obviously that is not a scaled technology yet. It's a nascent one, but one that has a lot of potential because that would be a big driver of demand. And the third thing I would say is we're getting a little bit more strategic with things like going back to our old tailings and recovering rare earths. So rare earths sit in our coal mines. They sit in gold mines, and we've mined that material out, but it's largely sitting in tailings. So we're looking to get that back out of it, not just in the US, but in our allied countries. And there is government financial support to getting out of that. So I always think, again, America's strong suit is innovation, and we're already seeing that to create a less dependent future.
Gracelin Baskaran is director of the Critical Minerals Security Program at the Center for Strategic and International Studies. Today, she's joining us from Washington, D.C. She's joined us in the past from Africa, from Australia, from Las Vegas, and more. She travels quite a bit as part of this job. Also with us, Deaux from our Bloomberg News team. He is here for the remainder of our hour. We're speaking next in this Critical Minerals special to Tripp Hornick, principal of Quince Street Strategy. He's joining us to talk about the government role here. Ask us questions at Bloomberg.com/AskRadio.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Right now, we have got CoreWeave shares surging 9.9% after hours. CoreWeave is a provider of a type of computing that powers AI systems. Topped analyst estimates for second quarter sales. Again, shares now up by 9.9%. Also, we heard from Super Microcomputer. It's out with a sales forecast for the current quarter. The topped analyst estimates after hours. SMCI on the ticker. Super Micro up now by 7.8%. Stocks ended the day in the red. Oil moved higher. S&P down 24, down 0.3. Dow today down 0.3. Nasdaq down 0.6. The 2-year 4.22%. The 10-year ahead of the CPI report 4.69%. Gold down $21 the ounce, 43.69, down 0.5%. West Texas Intermediate crude 83.45 a barrel, up by 1.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. We're back with our special focusing on critical minerals and rare earths. I'm Tim Stenovec with Kristine Aquino. We're joined by Deaux, senior economic Statecraft reporter for Bloomberg News. The reason we're talking about this is because it's been about a year since the U.S. kicked off its critical minerals Statecraft agenda with an unprecedented $400 million equity investment in MP Materials. The U.S. government has continued in those last 12 months. We have with us Tripp Hornick. He's principal of Quince Street Strategy. He joins us here in the Bloomberg Interactive Broker studio. And the way that your company works, Tripp, is you work as like a bridge between private companies and the U.S. government to get funding. And just last year, your firm did more than $1.4 billion in government funding and letters of intent to fund.
Yeah.
How's it going in 2026?
This year, we're seeing quarterly growth up over 60%. So it's been a pretty good year.
Are your what percentage of your clients right now, or that money, is related to critical minerals and rare earths?
I would say that everyone's related to critical minerals, energy dominance, and things that are going to go into the defense infrastructure as a result thereof. It's the same giant picture. Where do those critical minerals go? Into the data center, into the chips, into the power grid, also into the weapons. It's all the same ecosystem.
Yeah, I mean, there's a lot there. And listen, I know that you're kind of across that supply chain, but I do want to hone in back to the president's summit on Friday with you. the initial lead up to it, at least in the reporting that I was bringing in, was that it was going to be a bit of a nothing burger, right? A lot of people thought it'd be the president maybe puffing his chest and kind of making it clear to China, especially a month ahead of the Xi Jinping meeting that's supposed to be here in the U.S. Hey, we're kind of doing it our own way, and we're making progress. He actually ends up making a few significant investment announcements. My question to you is, should there be concern that this is it? That we're not going to have more down the line?
No, simple answer is A, thank you for having me back. Simple answer on that is no. There will absolutely be more coming down the line, and quite a bit rather shortly. I would say that two main things. One, you're seeing all the conditional announcements that are coming out of the Department of War. That's only because we don't have Title 10 passed. Title 10 is the Defense Appropriations Act. But you're also seeing a bunch of things from 2024 and 2025 be forwarded into departments that do have active cash, such as AAE, which is arms and armament. So you're seeing that money get pushed out of there. But what was uniquely interesting about this past Friday is what office ran that? Office of Energy Dominance. That was who ran that. National Security Council.
Yeah, why is that significant, though?
Because it's where the initial announcements came from. It was not a DOW core focus. It was, we're going to hit lithium, we're going to process that here, and also scandium overseas. That investment into Australia is key for energy dominance. This was, and having the Secretary of State there was showing, hey, we need to have soft diplomacy on this as well, which you are not seeing from the initial announcements that were just coming into USAR and MP. And, we could go very deep into MP and USAR.
That was USA Rare Earths and MP Materials.
Absolutely. Yeah. We could go very deep into whether they are domestic or not. It was fun to watch MP say, this is a wholly domestic, piece of metal that a magnet that he presented to the
Why are you saying it might not be?
Well, MP is, and what was presented there, but what we're seeing is, this is rather well known, what's happened with USA Rare Earths. You have the mine in Brazil, you have their subsidiary, which is Less Common Metals, that has put $200 million into Europe. And so, okay, that's not happening at Round Top here in the United States. That's happening in Brazil, and then it's being processed in Europe. That's not domestic.
I want to get to some of our listener questions that are coming in, and I apologize in advance if you sent a question and we do not get to it, because we have gotten a lot of them and we will not have time to get to all of these. Tripp, this is a question for you, and it's about, and you can, Joe, of course, feel free to jump in on this. Ken from Toronto asks, what is the role of Canada when it comes to supporting U.S. critical mineral needs?
Great question. 95% of what we have, or that we need, we have in contiguous 48 states. The issue that we have with Canada is that it takes much longer to permit. The president's announcements this past Friday were fast-tracking things. So if Canada can push that up, they will still be very helpful.
Is there some tension between the rhetoric that the U.S. has with Canada regarding trade, regarding wildfire smoke, that could put this at risk?
My opinion is no. Under statute, Canada, Australia, and the UK are treated as domestic locations for projects. And that's a very important thing to point out when it comes to funding.
I would push back just a bit, which I don't necessarily disagree with that, but I do think it is relevant that you still have the clear disagreement between the president and the prime minister of Canada. And I think there are plenty of folks in the market, right, and in industry who are worried that will continue to leak over and cause any sort of problems in a space where, like you're pointing out, and Gracelin mentioned earlier, like, we are clearly not just going it alone, that it is a us plus allies type of project here.
I mean, I agree with you completely, Joe. What I'm going to say is that most of these Canadian companies are junior miners already listed on the TSX. Mm-hmm. Those companies are, how should I say, not ready for prime time in general. 95% of the companies I deal with out of Canada are not ready for prime time.
Real quick question, though, Tripp. How many of the companies so far that we've seen get investments or letter of intent for investment from the United States government were ready for prime time?
The ones that went into Australia, most of them were, that we did an announcement in October and November of last year. What you've seen out of OSC, I mean, let's ask the question. Is Vulcan ready for prime time? Is Phoenix ready for prime time? It's an open question.
Yeah, well, to Joe's point, I mean, we have seen a lot of agencies deploying capital, right? The Pentagon, Export-Import Bank. Do you sense a coherent government strategy behind this process, or do you think it's kind of very, slap shot at the moment, just pick and choose?
Brilliant question. The answer is, first, No, there is not a coherent singular strategy, but that is not a result of not having a desire and excellent work by people in administration, particularly those on energy dominance, and some excellent work by the Secretary of Commerce, to say the least, and Secretary Burgum as well. So the White House has stated what they want to do, but there is the swamp, and things get bogged down.
What are the type of projects you think on the horizon as we're, again, looking forward? You said, yes, there is more to come. What type of projects do you think they're looking to invest in next?
Something you heard me say before, metallization. They know well that the mid-supply chain has not been solved. It's very interesting that energy fuels...
Mid-supply chain of rare earth
to
permanent magnet creation.
And I would say separate from permanent magnets as well, those that need to go into fan blades and into general defense production, such as things that need to go into Patriots as well, just for the basic metals, or even magnesium that needs to be into every flare or tracer bullet.
That sounds important from the stockpiling of our weapons question that we have right now.
I would love to hear that question.
Okay. I'm going to throw another one at you that's coming from a listener or viewer. Colin in Atlanta writes that MP is building their large new facility in Texas. Will that process material exclusively from the Mountain Pass mine, or might it process material mined by competitors? Do you know?
My answer would be ask Jim.
You're talking about Jim Litinsky.
Jim Litinsky, the CEO of MP Materials.
All right. Well, next time we get Jim on with Joe, we'll ask him. Joe, jump on in here because we only got just about 30 seconds left. If we leave our audience with one thought about what the next 12 months will look like when it comes to investment from the U.S. government, or at least government involvement, what should they be thinking about?
I think the main thing they should be looking at is results. The money is out there, and Tripp is talking about more money potentially coming, but the money that's already out there, and we're understanding this through our own reporting, is government wants to see results. And guess what? That means taxpayers are probably going to want to see results too, because it's not just the government's money.
Mm-hmm. Okay, so that brings me, Tripp, to another question. Yesterday we had Gary Evans from U.S. Antimony on the program, and I asked him about what it would take for him to sell a stake in his company to the U.S. government, and how much he would sell. He was very open to it. Mm-hmm. It's got $1 billion market cap. He said, if having the government as a shareholder, I would prefer not over 20%. It's a little crazy that under a Republican administration, we're talking about investment in companies by the U.S. government and state capitalism, state ownership of some of these companies right now. What are you hearing in Washington about the sort of appetite for this?
Absolutely, and we discussed this the last time that I was on with you. Appetite is all in, but not at 20%. They're looking between 10 and 20. A lot are settling at 10. The way that they look at this, at least from what I'm hearing on the Hill and in Republican circles and the support for the White House, is that this really isn't that different than the option to go in and deal with collateral once it fails, if something fails. So it's a backstop. That said, am I a big fan of state capitalism? No, but did it work for Intel so far? Yes. Did it work for
only
MP
been
so
a year
far?
for
Yes.
Intel.
And that's exactly what I said. Let's see what happens in 2 to 3 years.
Is it socialism?
It is not socialism. If we bring in DSA, we can have a whole debate on what real socialism is.
Why isn't it socialism?
It's not socialism because they're not controlling the company. It's not becoming a state entity. It's a minority control, and they're not necessarily preferred shares. Now, one of the benefits to the company is that it can set a valuation. That's the big deal. So for smaller firms that are looking to do capital raises, when the government comes in, it goes, here's a set valuation. It's not made off of a 409A. There we go. Now I can sell more capital. More shares for capital.
Joe, go ahead.
Can any of this fail? Is that okay?
Can the policy or can
the companies that have been invested in, is failure okay?
It is okay for some of them to fail. It is no different than what we have done before. I mean, even what we were doing in World War II. But what we should be doing is coming in and backstopping our supply chain as a whole. The problem that we're having right now is we're not doing that. We've invested in and loaned to too few companies.
And do you expect we will see at some point some failures?
Oh, absolutely.
Okay.
100%, especially when it comes to metallization and when it comes to oxide processing.